Good morning to everyone. Good morning. I hope you're doing very well. How you do? Welcome to the first session of the training provided by the European Microfinance Platform and the Green Inclusive and Climate Smart Finance Action Group. The training is about the Green Index 3.0. Today we're going to speak about the Standard 4, and the Standard 4 is about the green product and services. So this is the place to be if you're looking for this. Let's just give a couple of minutes for everyone to join. In the meantime, as usual, if you would like to share the name, your institutions in the chat so that we say hello. You can use the chat here as you used to do. Please, go ahead. Thank you. Thanks a lot, Nisi, for putting your name. Thanks, Alan. Thank Katie. Thanks a lot, everyone, to follow up the same process. If you like to share your name, your institution, your country, this is very welcome. We are still waiting a couple of people, and we start in 1 minute. So as usual, I see we have a quite diversified audience. So that's great. That's going to really enrich the training. So to make sure that this training will be enriched by this diversified set of experience and expertise into the participant, also please make sure to participate to the training by raising your hands when you want to provide example from your country or your institution, your experience, as well as potentially to share them into the chat directly while I'm speaking. That will very much help us to give context, of what we do, and feedback from your side that will enrich our understanding. In particular, today, speaking about green products. So, if every one of you already has implemented any kind of green products, it is good that you're going to share your experience in terms of what worked, what didn't work, etc. So, in particular, while we wait to the last people to join, can someone please put in the chat if you already had experience to implement green products into your institution or in a partner institution? Can we just have a small round in the chat? Any one of you that has already implemented in a microfinance institution any kind of green product? By green product, we mean, for example, a green loan, like a loan providing financing for some sustainable agricultural activity, from renewable energy efficiency, etc., etc. Or could also be any kind of other green product. That could also be trainings supporting lending on specific activities that are sustainable. Any one of you that has already developed any kind of green product, please share in the chat. I see no activities. We should have interpreted no one has ever developed a green product so far. No one has ever implemented a green product. Please kindly let us know. I see someone in the audience. Agri products, okay. Agri products, agricultural products means what? Does it has any green connotation? Is like sustainable agriculture, or is it standard agriculture? Standard. So standard will not qualify as green. Green, it means there should be a product that or is fully dedicated for sustainable agriculture, as of course we need to define it, or could be a standard agricultural product that include a part of the objective and a target, some sustainable activity. For example, I am financing agriculture inputs and machineries, and part of that one I will include like drip irrigation as other type of irrigation. Other type of irrigation will not qualify for a green product. Drip irrigation will qualify for a green product. Loan to support solar product, clean stove, housing efficiency and improvements. Okay. Kate, with the word that a dedicated product means it is a product that can finance only this green scope, or is a product that can finance also some standard activities that are not specifically green, but can also finance specific green activities. You see my question? You have green products that are just for this scope, so nothing you can finance with this product that is non-green, or it could be a product that finance various things. Among them, some of them are the specific solar or any other kind of green technology. Okay, thanks. Assess some institution offering imposed Okay. So I see some people have experience into the field. We will try to build on your expertise. If while we do this training, you will feel that your expertise provide added value, please kindly feel free to raise the hands and comment and say, in my case, this is working in this way, for example. Okay. Okay, here is that Alan is telling us that in terms of the work to develop green finance of various MFI. Very good. Okay, I think it's a good moment to start. Before getting into the start again, as we ask every time, can you please confirm various things? Hey, can you hear me well? Yes, super. Do you see the screen? You should be on the first slide where it's written Green GI 3.0 training series, green product and services. Is the screen visible? Okay, super. Then, before starting again, is there anyone among us that's for which is the first time that is following this training? Means you have not participated neither to session 1, session 2, or session 3. Anyone? Rola is the first time, okay? Anyone else for which is the first time? Okay, so we're only one participant for each is the first one, so I'm gonna just mention a couple of things to make sure you will not get lost into the training, because the first introduction is pretty repetition from what you already do. And then I'm gonna kindly refer you to the document we're gonna share, plus videos that we're gonna share. And I think you can contact, maybe Lisa, you can put the email of the action group into the chat, where they can reach you in case they would like to have access for the one participating for the first time to the previous documents as well as the records. Thanks. Okay, let's get started. So as you know, we are part of a set of training. This set of training is offered to you by the Green Inclusive and Climate Smart Finance Action Group of the European Microfinance Platform. We run this training in terms of 4 sessions of trainings. The training is focused on the Green Index 3.0, so the standard for assessing environmental performance of financial inclusive service provider. We organize the training into 4 sessions, 1 session for each one of the standard. We are now the last one of the English series, so thanks a lot for being with us. We spoke previously about defining and implementing an environmental strategy, identifying environmental risk and opportunity, managing environmental risk and opportunity last time, and now we are at offering green financial and non-financial products and services. We will get to know, while getting through this session, that of course offering green financial and non-financial products and services is very much related to the previous sessions. Why? Because you would like to offer green product, financial and non-financial, to your target market along your strategy, your vision, and your mission. You would like to be able to monitor the outreach of these green products as per the essential practice 2 of the standard 1 that we explained in session 1. It is about implementing the environmental strategy. We need to monitor and report how good are doing my green products. And of course, you would like to offer green financial and non-financial product in alignment with session 2 and 3, that mean aligned with standard 2 and standard 3 of the Green 3.0. Why? Because you want to offer green financial and non-financial product according to the identify opportunity to your clients, as well according to the identify risk in terms of risk of impact ecosystem, risk of being impacted by environmental degradation, as well as aligned with the standard 2 explained in session 3, that is about along your policy and process to manage such risk and such opportunity. So what I'm trying to say is that this standard 3 explained in present session, it is basically trying to summarize, it is related to all the other standard because it deploy the strategy, it is monitor and reported under the processes of the institution need to monitor, report, outreach, and it need to be structured in such a way that respond to identify opportunity and risk, as well as be part of a process and policy in terms of how to manage the opportunity and the risk. This need to be very clear. Many times green products are just developed in isolation. That of course can be good to start as a piloting, but if you want to really scale them up and make them sense for your own institution and the client, need to be included into a clear strategy and vision, a system of monitoring and reporting, and very importantly, they need to respond to the actual needs and demand of your client, as well as their risk in terms of impact and opportunities. And that's not enough yet. We also need to be structured within your standard risk and credit policy, because if you're not there, we'll be just always be managed in isolation, and we will not contribute to the overall outreach in terms of social and economic of your institution. Okay, so moving forward, the objective of today is to get an initial understanding on the standard 4 here, the standard 3, GI3, green products and services, financial and non-financial of the Green 3.0, and the related best practices. Also, we aim to develop the basis to assess the status of participant institution in relation to the standard Green Index 3.0 for the product and services, and be able to identify the gap. I just remind you, indeed, that if you participate in the previous session and you know that we're going to share with you a certain point toward the end, a link to open the standard 3 of the Green Index 3.0 and fill the standard 3 by the Green Index 3.0 for your own institution. That will allow to do a self-assessment, and eventually generate a score. If you do that for all the standard, for every standard, so basically did every session, then the Green Income and Climate Finance Action Group through the IT partner called Edera Solutions, so Edera Sustainable Solution is going to send to you your score, as well as you're going to send your score against the benchmark, means the score generated by the participant to the training. So if you're interested to do so, please kindly ensure that you fill your self-assessment in all of the session. You can always probably do also a posteriori. You could have access. If you didn't have yet, please write to the email written here above, green@emfp.eu, to the previous links. Okay, so let's move forward. This is our timeline. So we'll get fast to session 1, because basically everyone participated in the previous sessions, and then we focus on session 2, that is the core of our session today, that is green product and services, financial and non-financial, and then we go to the session 3. Okay, so where we look more in detail into the Green 3.0, and we share with you the link that you can use to fill the self-assessment. Okay, let's get to the introduction. So as said, for the one that just joined the first time, we're going to share the presentation you can get through in more detail. So for the other will be just a quick summary. So this is offered, as said, by the Green Climate Finance Action Group. It's a think tank developed in 2013. It's the oldest action group of the European Microfinance Platform. It's today with more than 150 members, affiliated with 75 institutions, and we have various kinds of objectives. Among these objectives, one key one is to develop dedicated tools, and one of the tools we have been developed since a while is the Green Index 3.0, that has been recognized since the foundation as the standard to assess the environmental performance of the microfinance institution. Here is the definition we put out last time of the green inclusive and climate smart of the green inclusive finance. As said, there is not a normative definition yet, yeah, but you need to know that is a set of risk management processes, financial product and non-financial services as part of the financial offer that are embedded into strategy and monitoring system enabled by policy and regulation that support economic opportunity and needs of household, micro, small, medium-sized enterprises that are partially excluded by the standard banking sector in a clean, resilient, and sustainable manner. That's a working definition we use in the Green Inclusive and Climate Smart Finance Action Group since a while, and basically it nailed down to this, what we explained last time. We have three key dimensions that we need to take into account the green inclusive finance. We already presented them in the last 3 sessions. Nevertheless, let's please focus a second on these 3 dimensions to think how that will play a role into green products. Yeah. So why these things are meaningful for a green product, what we're going to speak today. So green inclusive finance has to do about vulnerability. Vulnerability means how the client and the institution are affected by the environment. Yeah, for example, droughts, the client are affected. Flood, a branch could be affected by the flood, for example. Adverse impact. Yeah, this is what the client are doing. For example, cutting trees. Yeah, for example, implementing activities that are polluting river and soil, etc. So this is how the client and or the institution also using sustainable use of cars, of papers, water into the office affect the environment. And then of course economic opportunity that has to do with the demand and of the client for needs that could be personal needs or could be also business needs that can increase revenue, as well as potential demand by the institution that can see an opportunity to actually go green. Now, these are the 3 key dimensions. It's very important to consider them. Let's see what it means at the level of the product. Yeah, if you want to do a product, yeah, a green product need to support the improvement of one of these 3 dimensions at least without affecting the other 2. What do I mean? You design a product, the product needs to be designed to answer one of the problems along one of these dimensions. For example, vulnerability. I want to do a green product that supports my client to decrease their vulnerability to droughts. That could be an objective. Now I need to think which kind of product will fit. Yeah, for example, resiliencies. Yeah, for example, drip irrigation, other things. Yeah, so that is your reason why you have identified vulnerability, and then the second question you need to think about is vulnerability to what? Because some clients will be vulnerable to something to someone else. So you need to clearly identify what is the threats to which your clients are vulnerable to, for example, and then you say, okay, good, this is the most important thing. Why? Because this vulnerability can translate into a real problem for my client, eventually can become a financial risk for my institution. And one of the key things I want to do, I want to support to increase resiliencies and adaptive capacity of my clients. So then you say, good, now I'm going to do a product. Which kind of product? The product needs to answer to this vulnerability problem, okay? But that will not be enough. You also want to check that while answering to this vulnerability problem is not going to affect the other 3 dimensions of green inclusive finance. Example, if you start saying, good, I want or I would like to have a product that support that reduce the vulnerability to droughts, and then to do so, I can do various things. One could be, let's say, drip irrigation, okay? The second one could be, modified seeds that are resilient to droughts. And among these seeds, you can have 2 types of seeds, like the hybrid one, or it could be the genetically modified one. Both will answer, these things will sort of answer to the problem of vulnerability, but the second one, the genetic modified one, will affect the adverse impact to the environment. Why? Because genetically modified seeds have the tendency, for example, to affect local biodiversity because they're bringing in new species, yeah, and the species will be persistent and then will become eventually dominating on the local ecosystem. So in that case, your green product, green because it was supposed to product that was supposed to solve one problem identified, like vulnerability to droughts, will not be classified as green because that is going to affect the other dimension. This thing is very important into your reflection. Yeah, so you identify these 3 dimensions. You try to understand which one it could be plural, are the most important for your client. And of course, when you speak of vulnerability, adverse impact, economic opportunities, they have inside many other sub-classifications. Adverse impact in which sense? greenhouse gas emission, as we see, for example, polluting a river or soil. It could be deforestation. It could be many other things. Yeah. Then you focus on 1, 2, or 3 of these subclass within each one of these dimensions. You try to think what is the product that could answer to this identify risk or opportunity, and then you need to check that the product you want to develop and put in the market is not affecting the other one. That's important because it means overall you want to provide an added value to your client. Now, of course, products, when we speak about product, normally our products are focused on the indirect part because are product that you offer to your clients. I just remind you that the green inclusive finance also has to do, of course, with direct, and direct means it's everything you do at the level of your institution in terms of headquarters or branches, as well as the human resources. So the Green Index, as said, this you probably got to know since a while, has been developed 2014. Luckily, it was part of this process since back in time. And since back in time, has become pretty clear that the Green Index was not just an instrument to assess the environmental performance, or not just an evaluation instrument, but is also an awareness raising. What does it mean, an awareness raising? By getting to know it, by reading that through, you start thinking what your institution could do to move forward into green inclusive finance. It's not only an awareness raising, it has been designed, in particular the version 3.0, in such detail that is also a training tool. You open it up, don't be worried if you don't do too much. You just open it up and you start reading, because the various things within each one of the indicators that are going to be explained as the possible multiple choice answer are the kind of best practices activity you could aim to do if you want to progress further into the green inclusive finance. And of course, it is also an instrument that should allow to identify the first gap, yeah, identify what are the priority of action, and then defining planning. And the idea then is that after you implement your improvement plan, then of course you would like to pass another green index and see if you have been improved or not. Now, as you know, since some years, 2021 or 2022, the Dimension 7 is a new standard of the Universal Standard for Environmental and Social Performance Management of the series SPTF. What is nice to know is that the Dimension 7 has been actually co-developed by the Green Inclusive and Climate Smart Finance Action Group, together with series and SPTF. I would please be part of the committee, and we ensure that the Green Index 3.0 and the Dimension 7 are fully aligned. Means there is not, contradiction, and there is not, any way in which you can get confused. The two, one is aligned the Dimension 7 to the other standard, to the other dimension of the universal standard, and the Green Index 3.0 goes more in detail. What does it mean is that the Green Index 3.0, if you feed it one all, it's going to allow you to already fill the Dimension 7, so you already done it. And if you start with doing an assessment in terms of the 7 Universal Standard for Social and Environmental Performance Management, then you will have a first idea of how your Green Index 3.0 will work or will look like. Yeah. So, and if you want to go more in detail, then you can take a Green Index 3.0. Okay, this is the mapping. The means for each one of the standard, the Green Index 3.0 has more indicators compared to the Dimension 7. On top of that, the Green Index 3.0 is built on multiple choice question. That means it's not just going to asking you, do you have product for solar energy, but it's going to ask you which kind of solar energy are you financing, and then you have a list of like 10, 15, 20 solutions that you need to select. These are the main differences. And on top of that, the Green Index 3.0 always is accompanied with supporting quantitative indicator, not just the qualitative one. We're also asking about the outreach of your action. And the other difference is that as 4 standard, because the identification and management are divided into a standard for the Green Index 3.0, while they're merged together in one unique standard for Dimension 7. If you need to know more about the differences, please kindly feel free to drop us an email so we can clarify any kind of doubt you may have. This we know. Let's move forward. These are the first standard with the 4 essential practices. We went through the GI0, GI1, GI2. Now let's focus into the GI3, that is the topic of today. So in the GI3, as you see, is focused on green product and services. It is composed of 2 essential practices. One is called financial and one is called non-financial. The first one is about financial product and services. It includes, of course, the green loans. The thing that you will come to your mind first. These green loans are divided into 4 categories: clean energy and energy efficiency, first category. Sustainable agriculture, that includes quite some things. It's sustainable agriculture, sustainable livestock, sustainable forestry, sustainable fishery. And then you have clean water and sanitation, and then you have circular economy and other activity you may have. But then it does not stop there. It also includes other kind of financial product like savings, for example, remittances, emergency loan that can contribute to include the adaptive capacity of your client to shocks, for example, as well as climate and production insurance. And then when we go to the essential practice 2, then there where you find the non-financial products and services. Yeah, they are classified along 4 different subcategories. Awareness raising. Do you make your clients aware of how green technology and practices can contribute to reduce the risk and increase the revenue, for example? Training. Do you train your client on how to actually implement such practices and technology? Technical assistance. Do you accompany your client, for example, into the field and a step-by-step approach on how to implement, ensure it's done correctly, this new green practice or technology? And then point 4, partnership. Partnership is about, do you support your client to develop partnership with specific technology, technical provider that can implement them to actually implement these green technology and practices? Voila, this is the graph that will result when you fill it. Another quick things, we explained that last time, but I think is important, very importantly, even in the standard 3, is that every question, every indicator, and every essential practices basically follow the same structure or substructure into the Green 3.0. First of all, we are asking if you have a practices. Yeah, for example, do you have green loans? And we ask you, for example, do you use to finance what for these green loans? Yeah, but that's not enough. Then we're gonna ask, okay, which capacity do you have to do so, and which tool do you use to do so? Now that's an important one. Yeah, that we call them enablers, because to do a correct environmental assessment, you don't only want to know what you actually do, you also want to know how do you do it. And to be sure that you know how you do it, we need to check within the financial institution their capacity to do. So we assess if the institution has acquired capacity through their own staff, for example, or because of partners with some technology or technical provider, as well in terms of enablers, in terms of tools. That is, do you use tools? Which kind of tools, indicators, standards, etc., IT solution that you implement to do what you aim to do? Example, I have a green loan. Super, I'm designing a green loan. This green loan is designed for example, sustainable agriculture. Okay, now, did I train my loan officer to disburse this specific product? Means, do I have some flyers? Do I have some marketing material? Do they know what is the added value in terms of benefit for the environment and for the client of this new product? If you don't do so, you can doubt that that really will go through. Yeah, tools. Do you have any tools to identify what the client are doing that is green or not? Yeah, the client is telling me, yes, I'm doing these fantastic practices and it's green. Okay, good. Show me what it is. Okay, is crop diversification? Tell me how you do it. I'm gonna check it. Do you do this, and that? Yeah. How you collect the data? You do in a piece of paper, you do in Excel, you do in an AT solution, etc. These are all enablers. And then very important is about the outreach. Yeah, because of course, how do you compare the advancement of an institution as well for you inside internally that has, for example, 3 green loans, one for solar, one for sustainable agriculture, one for circular economy like electric, for smart mobility like electric vehicle, to one that maybe just have one product on energy efficiency. Now, it will sound that the first one is more advanced than the second one, but then you need to understand what is the outreach of these practices. For example, in the term of green product, we're going to ask, okay, to how many clients did you disburse these specific loans? Yeah, and for what was the amount in the last year? And according to that, we're going to understand the outreach. The outreach means how much that really fulfill the needs of the client, how good you are to disburse them, etc., etc. And that also will help you to actually monitor your own set of activities. Yeah, I want to do more next year compared to the previous year. As said, very importantly, so we introduced this concept last time, but I think it's important to remind, the Green 3.0 is structured in terms of an improvement plan. What is an improvement plan? A plan that is a model of improvement. That means it's a plan, do, check, and act. So as said, you have a strategy. You identify the needs of your client. You do by developing products and management processes. You then implement them. Then you want to monitor and report what you did. And according to what you realize into your monitoring and reporting, you need to then eventually adapt your strategy, adapt your product and services and processes, and then keep on redo it. This will be an ongoing work. You need to be conscious that as every product, this needs to be done in particular at the beginning, in the piloting phases, and then in the scale-up phase when you start. But it's not something that is gonna end. It's gonna finish soon, because it is an ongoing process. You always need to ensure you fulfill the needs of your client, and on top of that, the climate is gonna change, and that means that you always need to keep on adapting. Okay, so any questions so far? If you have questions, please kindly raise your hand, or please kindly put them into the chat. As by ask there for kindly share the presentation, every participant will receive the presentation after the session. Okay. Example of in terms of tools, we're going to look at it, Patrick, we're going to look at now in detail when we look into the standard now. So there is a list of possible tools you may use. Let me know if that will not be satisfactory and you need more detail that are listed to the Green Industry 3.0. That could be different kind of tools, of course. They have tools that could be digital one, exactly as you said, like verification of what the client did. Yeah, there are tools that are any other type of tool. Could also, also technical card of solar technology, or a technical card of sustainable practices. It also works as a tool. So it's a tool that helps you to implement this product. Any other questions? Okay, if there are no questions, please don't be shy to raise your hands and share your experience. Yeah, we now go through the green index and the green product and services. Please fasten your seatbelt. This will be quite some journey. We'll go through quite some set of activities, and once you will heard about those, then please kindly feel free to share your own activity into green product. There are some people that put it in the chat, so if you then want to raise your hands and you want them to, you then want to take your microphone and tell us a bit of your experience of green product, this is very welcome. Okay, let's get into where you can get information. Some information you can get are from the green map. The green map, as we mentioned in the last session as well, is a work that has been done by the European Microfinance Platform and the Green Inclusion and Climate Smart Finance Action Group some years ago, thanks to support of the Luxembourg Ministry, where we get some fund to actually look around to various financial institutions, as well as to various investors, network, and projects that has implemented interesting products, for example, and other things have been put in on a map. Yeah, you can explore here. It's fully available. It's delivered and provided to you by either a sustainable solution, the IT partner of the Green Inclusion and Climate Smart Finance Action Group, and you can actually explore there and look which institution is doing what. If you want to have concrete example on the actual implementation and practices, we also built, thanks to the work of various consultants, we have built some case studies. Yeah. And these case studies are focused into each one of the essential practices of the Green Industry 3.0. So we have here two about financial products and services, one from Annapurna in India, for example, one from Pula, voila, and then at the global level, and then also non-financial products and services that were collected, for example, by ASCII in Philippines as example of things you may do. There are, of course, many more. Yeah, many more. There are various experiences of today. There are more than 15 years of track record of green products, so probably 20. And of course, there are many cases you can find around. So let's see where you can find this other information. There is a training online developed by the Green Inclusion and Climate Finance Action Group since a while, and this is fully available and freely available. It is on the Green Inclusion and Climate Finance Action Group webpage of the European Microfinance Platform, and there are various modules, and in the module 5, the green products are organized along module 1.5, module 5.1, sorry, 5.2, 5.34, 5.5, 5.6, where we basically explain green loan for clean energy efficiency, green loan for sustainable agriculture and climate change adaptation, green loan for wash and circular economy, climate agriculture microinsurance, green non-financial services. Voila. So it's quite extensive. There are quite some hundreds of slides, and there is a nice introductory video about those that we kindly invite you to go and look for it. Yeah. Thanks. This will be quite extensive. Now let's go forward. What does it mean, green product and services? Do you have example of non-financial green product and services? The second question we already answered. Yeah, so that's fine. We probably don't want to repeat. I have various people that put in the chat if you have example of financial, non-financial green product and services. Thanks a lot for that. We already went through this, but maybe a question for you all. What does it mean, green product and services? Yeah. Can you please, someone raise the hands and answer, or just put in the chat, what do you mean by that? What do we mean by those? Please, kindly, your input. Please go ahead. I don't see answer popping up. What is a green product? Any ideas? We saw what has been shared there. We've been seeing quite some green loans. Anything beyond the green loans? Okay, product and services that does not have negative impact on the environment. Okay, good. This is a do not harm principle. Okay, so now if we go back to our system, remind that there is a dimension, 3 dimension, vulnerability, environmental impact, and demand and needs from the clients. Now, do not, and we define a green product, as said, with something that will improve one of these dimensions without affecting the other. Just not affecting the, not having not have negative impact on environment, that will not allow to classify as a green product. Yeah, this will just be a do not harm policy. I try to avoid to make bad to the environment. You actually want to have a product that eventually improve, you know, your situation, and eventually do not harm other aspect. Product and services that lead to environmental renewal or preservation. Yeah, that's the other side of the coin. So I do something positive. Okay. Green financial product be a loan that respond to the borrower needs to generate renewable energy. Product and services that are environmentally positive. Product and services that aims to at waste reduction and promote sustainability. Product that contribute to reduce waste, maximize resource efficiency, and are often made using non-toxic sustainable material or friendly environment. Product that finance activities with reduced carbon emission as compared to status quo. I think it's important, this last point, the status quo. Yeah, of course, how do you define if you're doing green? Yeah, you need to define green. Of course, there is an overall concept, but also need to be relativized according to what other products are doing and what other company, in particular in the same region and country, is happening. Green products are those products that contribute sustainably operate in a specific environment. Non-financial services product can be training and non-financial coaching and farmer, for example, for agroecology transition. Yeah, so the importance of a non-financial aspect that actually typically enable financial improvement as well, and financial products and services are addressed to address vulnerability of clients affected by climate change. So Alan is including a new aspect that's relevant, of course. Is not only about improving the environmental impact, but is also reducing the vulnerability. Let's not forget that your client will be among the most vulnerable in your region. Of course, there will be even more vulnerable, but among the more vulnerable in the regions to various climate threats, for example. And what you want to do with the green product is to help them to reduce their own vulnerability. Yeah, that's the key things. And you want to do it in a sustainable way, means in a way in which it will be sustainable for the environment. Product and services that impact positively on the vulnerable in society, have an economic benefit and client and positive impact on the environment. Product that not affect the environment. Okay, super. So we have a lot of ideas. That's already brought quite some stuff into the table that are key and all really contribute to the discussion. Please also make sure that there is still not a normative definition. Yes, it's not this is it and this is not. Majority of the definition we have or we use is basically coming from what the institutions are actually already doing. Yeah, and then we try to structure them. Yeah. Product service contribute to manage adaptation and mitigation of negative impact. Good. So let's see what the green index tells us. Okay, so the green product and services. Let's see what is inside. These are described by the standard 3 of the green index 3.0. So it is about supply and delivery of green products and services to customer. Both financial and non-financial services are assessed. Financial product can include green credit, but also insurance, saving, or monetary money transfer. Non-financial service can include awareness raising, training, technical assistance, and partnerships. Let's see in detail. Okay, let's jump into that. So the dimension, so the standard 3 of the Green Index 3.0 is the most extensive one. So again, please sit your belt, fasten your seatbelt, and let's go through. What is nice is that there is a repeated structure, so that should allow you to find yourself into this multiplicity of indicator. Also, what is important to understand that when you go through the Greenness 3.0, in this specific standard, it is quite long. You need to understand that should work in 3 ways. Ways number 1 is an assessment. If you will see, for example, that is going to ask you, the tool, do you have green product for sustainable agriculture, and you don't have it, then will basically allow you to skip 2, 3, 4 questions at once. Yeah, because then the other question will just ask you about this product. And if you don't have, for example, circular economy, again, they're going to keep you other 3 questions. So now I'm going to go through the various questions, but please be mindful that when you're going to answer, you will see that according to your engagement, then you will have much less question normally. Normal institution has 1 or 2 products. Second is in awareness raising. I will strongly invite you to go through, in any case, whatever you do, not just use it as an evaluation tool, but read it through, because it can really raise your awareness of what you could do, as well as could be a training. Okay, if I want to do something, how should I do? Because sometimes you detail step by step what should be done in terms of best practices. Okay, let's start. So here we will see, when we start from the essential practice 1 of the Green Index 3.0, and we will see that this essential practice 1 is basically divided into various parts. So the first part is about green loans, and within this part of the green loan we're going to look at now is divided into 4 sub-parts, everyone dedicated to a specific green scope. First one is energy efficiency, sustainable renewable energy. Second one is sustainable agriculture. Third one is access to wash and sanitation. And fourth one is all the other type of products, in particular including circular economy and smart mobility. Then it means that these 4 indicators you see here, you will see repeated 4 times per each one of this scope. Okay, so let's look to the first one. Here we're focused on the topic of sustainable agriculture, of renewable energy and energy efficiency. So first of all, the institution is asking, the institution offer loans that allow its client to implement or maintain clean energy and energy efficiency equipment. This GI 3.1.1 is important because it will be repeated on all the other 3 categories. Why is it important to understand? Here we are not asking if you have a green loan. Yeah, if you have a loan that is just dedicated for supporting something green, but we're rather asking if any kind of your loans, means could be consumption loan, could be investment loan, could be a working capital loan, etc., 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 you may have, can contribute or is contributing for your client, to acquire clean energy or energy efficiency. That's different. Yeah, that's important because majority still of the financing, an important part of the finance for green, goes also with non-dedicated products. So it's very important that you get to know this. In particular, I'm pretty sure that within your own portfolio, without knowing, some of these technologies already financed. And it's key for you to define and to understand what you actually can develop in terms of green product, to understand what is actually already green within your own portfolio. That's the very first key step to be done. Look inside your portfolio. What are you actually financed that can be classified as green with your standard product and services? And then the second important point about the G3.1.1 is that you can support the implementation or the maintenance. That means it could be something for an investment. So you actually, support, for example, the development of 2 hectares on cacao in agroforestry. That's an investment. Or you could also support, the maintenance. For example, of a plantation of cacao, you need to cut the trees, you need to put the organic fertilizer, etc. Then we go to the G3.1.2. Here is actually where we ask, okay, we understood, maybe you are financing something green, but do you actually have green product? That's basically what is asking the indicator 2. So the institution finance clean energy and energy efficiency technology through dedicated loan product, including specific characteristics. We're going to look at the specific characteristic in a moment where we're going to open the Green Index 3.0. Yeah? Don't be afraid. I remind you also that these are just the name of the indicator. Within each indicator, then you have a multiple choice of 10 more possible choice. We're going to look at it in a second. You see the difference between the 3.1.1 and 3.1.2. If someone don't see the difference, please just write in the chat. I'm going to try to explain it. The 3.1.1 is asking if you're financing any kind of green technology for the specific case, clean energy and energy efficiency. Also with the loan for which the scope is not only green, could be also any kind of other scope, yeah, consumption, investment, working capital, etc. The GI 3.1.2 is instead asking, do you have a dedicated loan product? Means a product for which the only scope is sustainable clean energy and energy efficiency, yeah. Now, G3.1.3, now let's see, these are the enablers. Yeah, remind you that every time we ask on the practices, then we go to the enablers. And the G.I.3.3, GI3.1.4 is exactly the 2 enablers that we're going to check. So the institution support the development of a specific capacity on clean energy and energy efficiency technology lending thanks to provision of dedicated regular training to staff or partnership with provider technology or technical assistant. That's where we check where you should get in terms of best practices that to actually do so, you need to get trained or you need to have partnership for that. Attention, this is training and capacity of your own institution, not of the client. Or the one of the client are somewhere else, are in the non-financial product and service. This is for your own client. We're seeing for your own institution. We're checking if your institution is capable to do so. And then the institution applies specific tools and procedure to support the loan provision for clean energy and energy efficiency technology, such as a technical documentation information, indicator to verify or track the technology and practices that qualifies green, etc. We're going to look into that a bit more in detail when we're going to share with you the link of the standard 3. So this package of 3 indicators are repeated 4 times into the first essential practices of the standard 3 of the Green Index 3.0. We just went through now for the topic of clean energy and energy efficiency. Yeah, we're going to now look into the other dimension. Yeah? You see on the right, this set of indicators are accompanied by a set of quantitative indicators, what we call the outreach indicator, that are going to help you as well as your assessor to understand what is the actual outreach of the green product you have. For example, number of loan for renewable energy care disbursed of the fiscal year, the volume, the percentage, yeah, divided into clean renewable energy and energy efficiency. Yeah. So I invite you to go through this in terms of looking what are quantitative indicators that can actually support to better track your outreach. With that, we go to the next 3 sub-part of the essential practice 1 of the standard 3. Now the structure of the green is exactly the same, but now focus on another topic. So in this slide, we are focused on sustainable agriculture, animal breeding, or fishery practices, yeah, like nature-based solution. So the question is now, okay, same thing. First indicator: are you financing, through your own activities, your own lending practices that support sustainable agriculture, that support animal breeding, support fishery practices, yeah, that are all sustainable in terms of nature-based solution, yeah, that support climate change adaptation or biodiversity conservation. That's another key scope. And then I'm not going to go through the other indicator because indicator 6 is actually asking you, do you have a dedicated loan for that? The indicator 7 is asking you, does your institution has capacity to do so, or there's a partnership with a provider to do so? And the GI 3.1.8 is instead asking if you have a specific tool to do so. We will review the tool in a second. Yeah. So the structure should be clear, and then here again you have a long list of quantitative indicators that again you can go through and read them through. You know, they go start from a broader one like number of sustainable agricultural loan disbursed of the year to more detail. For example, hectare of land restored, hectare of land reforest, the greenhouse gas capture from sustainable practices financed over the fiscal year. We have now then the other set of 4 indicators. This is that focus on another key dimension, that's clean drinking water and sanitation. Same things. Are you financing clean drinking water and sanitation with non-dedicated loans? Do you do with dedicated loan product or just green? Are you trained? Do you have technology provider to do so? Yeah. Do you have any tools to do so? And then a quantitative indicator. And then we have the same one here. This is about the last dimension, is about circular economy. Same thing. Are you financing circular economy with a non-dedicated loan? Are you doing it with dedicated loan? Do you get the capacity to do so? And how do you do in terms of tools? And then on the right, quantitative indicator, again, okay, number of loans for circular economy. Now, let me allow myself to go back a second in terms of content and concept. So I said, this structure that basically cover until indicator 16 of the Green Industry 3.0, it works that you need to fill it only if you have it. That means if you don't have anything of this, that's sort of neutral. You will just answer no to the first indication of each one of these slides, and the other indicator you don't need to fill it. If instead you answer yes to the first or the second indicator, then you probably need to fit the other indicator to be sure that we understand what actually you're doing. Then in terms of content, yeah. In terms of contents, here we speak about clean energy. So clean energy is any kind of energy that do not emit or reduce the amount of emission, you know, of, for example, greenhouse gases or other pollutants into the atmosphere, for example, or in any or on land and water. Energy efficiency instead could be also, you know, energy that are non-renewable, for example, coal or oil, etc., but for which the technology is going to generate the same amount of energy for less amount of fuel to be included. Now, instead, sustainable agriculture, here we speak about agriculture, breeding practices, as well as forestry and fishery that has a lower or positive effect on biodiversity. For example, agroforestry, for example, soil restoration, for example, silvopastoral, for example, sustainable fishery practices, etc. Here instead we speak about clean drinking water and sanitation, to provide access, you know, to sanitation services as well as you know, clean water and drinking for, you know, for household purposes. Here we speak about anything that has to do with various other green scope, in particular circular economy. Circular economy is everything that has to do with waste management, recycling and reselling and repackaging. It also inside the green activity, you will also have other practices that has to do, for example, with, you know, more clean mobility, like electric vehicle, for example, etc. Okay, now we move forward in the indicator 17. And now we get a bit more in detail. So if you claim that you have you're financing any kind of practices or technologies that are green, then you need to justify, you need to know what is green. Yeah, because what you mean by green and what I mean by green probably is not the same. What your loan officer and your head of branches means by green and what headquarter mean by green is probably not the same. So it's of key importance that the institution has a green practice and technology that are specified by a taxonomy. Here is written the EU taxonomy. If you need to report to that, or if you don't have a taxonomy because it's one of the first one and the most extensive one, or other international taxonomy, or a local taxonomy. This local taxonomy can be your country taxonomy. Of course, that's the one you need to implement first, yeah, because it will be in your local legislation, etc. But also could be a simple if you don't need to report the EU taxonomy, if you're in a country where you don't have a green taxonomy, it could also be a simple formal document, but developed by your own institution that define what is green. Green is this one, it's for this technology with this scope, that allow basically to have the same dictionary. This is key, because if you don't have a green taxonomy, whatever you're going to declare above could eventually be doubtful, because we maybe don't understand what is green. You don't understand, your own working force does not understand. It's a key steps that need to be done to ensure that things that are green are actually green. Then the institution offers specific loans to the client when affected by sudden climate change events. Attention here, we're moving forward what is standardly classified as green loans, so loans that support green improvement, now to other kind of loans that are not green per se, means they don't improve per se any kind of environmental expert. Typically, sometimes you will not understand as a green loan, but instead are green. Why? Because they can support your client to reduce their vulnerability, in particularly after an event happens. The institution offers specific loans to clients when affected by sudden climate change events. So a client of you is affected to droughts, even if you finance like resilient seeds, and then you provide to her or him some emergency loans, loans rescheduling, some loan restructuring, etc., that help her or him to be less affected by these climate events. The institution offers non-dedicated or dedicated SME loans. That's important. Some institution is not only the target of microfinance, some also finance, small and medium enterprises. That's what it means, is that you can finance also enterprises that actually are the ones that are assembling or providing to the market some of green practices. For example, you can offer non-dedicated or dedicated small medium enterprise loan for local enterprises that produce, assemble, or distribute clean energy or energy efficiency technology, that provide inputs or services for sustainable agriculture and breeding, fishery and practices, like a farm of biodigester or gases, where the farmer can bring the manure and they can transform into fertilizer, into energy, or for example an assembler of solar panel, or a company that collects waste and recycle them, etc. The institution offers a loan or in partnership insurance product. If a client is affected by a loss in production and an impact in term of climate, is there an insurance that can cover it? That can be done directly or through partnership. Then the institution had to develop a specific capacity. Now we go back to the capacity to provide agriculture or climate microinsurance thanks to training or partnerships. Do you have specific tools, like to actually identify, for example, the damages of your clients? And then here on the right, there is all the set of quantitative indicators, like number of borrowers with active agricultural climate microinsurance contracts, number of outstanding loan with active insurance, amount of insurance per fiscal year, etc. And then almost finalizing, you see there are quite some indicators, but what is important to know is that many of the institutions only focus on some few of these items. So that means that what you need to do by actually assess yourself is like 20-25% of all the indicators typically. But what is important, you can go through all the indicators to actually see what you could do. The institution offers other financial products dedicated to helping clients to become more resilient to environmental shock or climate threats. That could include savings product. Okay, if you're affected by climate event, you have savings, you can be less worse off. Remittances, similar. Someone from outside can provide you money when your community is affected by some specific climate events. Guarantees, etc. The institution has developed the specific capacity to assess the damage of climate change and client activity and properties thanks to training and partnership. So if you want to do so, how do you actually assess these damages? So you got the training to do that, you work with the partner to do that, and then of course you have specific tools to support non-financial, non-insurance product to cope with climate disasters, such as dedicated restructuring or refinancing assessment. Here on the right is the quantitative tool, like number of depositor savings, volume of depositor savings, etc. Let us see a bit more in detail some financial institutions that has implemented some green product. There are many in the market. We had to do some selection, and so we just provide you a couple of examples. So one of those is Annapurna Finance in India. You can find the full case studies into the documents that my colleague from the FSP are going to share into the chat. Yeah, so there is a case study there. You can read that through. So let's see. Annapurna has a SWOT product since 2014 that is a financial assistance to individual to access safe water and sanitation facilities. Yeah, it has a tenuity of 12 to 36 months. Can provide a loan size between $120 and $300. It has this interest rate repayment schedule adapted to the cash flow of the wash technology. That's an important one. You want to attach the repayment schedule to the actual capacity to generate cash flow of the underlying asset you are financing. Yeah, to be sure that you can actually the client can actually reimburse your loan and making eventually productive use or satisfactory use of the technology you finance. Longer long term and lower interest rate. We have loan utilization checks to validate the usage. Important. So why is it going this long for this actual scope? How can we check it? They have this kind of check in place. We have a partnership with water.org. That is an expert into this topic, awareness raising on safe water and sanitation to help the client to actually raise their interest into actually implementing this kind of technology and practices, and training on building resources efficient facilities. So how the client could actually engage and build this facility. Now, this is a bit, the detail. So we get some of the water, some of the sanitation, yeah, type of toilet, type of water pipe connection that they're actually implementing. Support initiative through partnership with technology providers, civil society organization, and specialization grant program. So we're training drone officer on green lending principle. Overall, the client awareness raising on managing safe water and sanitation loan property, client training program in terms of in-person and video tutorial on water usage and sanitation practices, partnership with technology vendors, partnership with civil organization, specialized grant program to implement and maintain the wash technology. Other example we may see, that's a different example. We go from Pula. Pula provide agriculture insurance and technology company that helps smallholder cope with yields risk and improve the farming practices. Yeah, so it helps agricultural climate insurance, index insurance. Index insurance means that you will get repaid if your fixed indicator in terms of from amount of droughts or rain, it is different from the standard set without having a verification to be done on the field. It has hybrid insurance, it's a mix between the standard and the index insurance, and insurance protecting properties against extreme weather events. We provide dedicated training to the staff. They partnership with third-party insurance. They partnership with public program as well as with grant program. They use which kind of data and tool? They use satellite data to monitor the actual affection and the various level of indicators, to weather station data, specific indicator indices, existing national database, as well as citizen science or community monitoring. An average farmer insure is 1 hectare, normally insure 1 hectare. The premium annual is €9. They're linking client with the right parametric insurance product, and companies pull a flagship product is the area yield insurance. That is a parametric insurance that based on an area of historical crop yields. Yeah, if you have yield that is lower, is where the insurance get into. Bundle of insurance in existing product and services, so it's not selling the insurance alone, but it's bundled, for example, to loan. This is a good practices in general. Pula Insurance Engine is a web-based platform that automatizes the pricing based on historical weather and yield index tailored to each area through regular data collection in the field. So it's very important that data are collected constantly into the field to make sure that the insurance works well, in particular this parametric. Any questions you may have, please kindly raise your hands. Let us know. You can raise your hands. You can put it into the chat. Okay, does green index also use quantitative qualitative indicator or is just the tick of the boxes? I'm not sure what you mean by qualitative indicator. Qualitative indicator is what? Is that you have open field? Do you mean if you can write open text? Guzman? So if you mean that you have open text, so normally in the green index, it has 3 layers. Layer number 1, you have a question, and you have a set of multiple choice. Yeah, that is the last one is always a choice or say other that you can then specify what other means. You can write it down in an open field. Then you have quantitative indicator that ask you numbers, and then every qualitative indicator has the possibility to actually add the justification to your answer. For example, yes, I have a solar panel. Yes, good. How much? And then you can describe your solar panel you have. So yes, if that's what you mean, it also allows qualitative indicators and answer. Okay, so let's go. Oops, sorry, I stopped sharing. Can you please confirm that you still see my slide? You should see green non-financial products. Okay, super. Okay, let's get into that. Now, green non-financial product. Okay, we have 3 types. First of all, the institution raise awareness of its client on their vulnerability to climate change, environmental degradation, and biodiversity, or adverse environmental impact of their activities. Is awareness, raise awareness. Does it does or does not do it? Then we will see how it's going to do it. And then, of course, the quantitative indicator are support the number of client or non-client who receive the information on the vulnerability, number of client or non-client receive information about mitigation strategy, number of client or non-client who receive information on adverse environmental impact during the year, number of clients who receive information on adverse environmental impact, mitigation strategy, etc., etc. That's all about the awareness raising. Yeah. Then the institution facilitator offer to its client training. By attention that the training is to the client or not to the loan officer. The training to the loan officer is in the previous essential practices. This actually to the training to the client could be trainings on ongoing technical assistance. The difference is that training it could be a training one shot, while the ongoing technical assistance you support the client into his own premises to actually implement and improve technology or practices. That in field visit or peer learning opportunity help the client to learn from others to implement green practice and technology. The institution has developed capacity to provide trainings or technical assistance to its client on how to address and mitigate vulnerability or adverse environmental impact thanks to the provision of dedicated training to the staff. Now this is the enabler of the training. So do you train your own clients as you've been trained to train your clients? So we're speaking about training of trainers. Yeah. Or is a third specialized partner that is specialized to provide trainings that provide training per se. The institution alone or through its partner apply specific procedure and tools for planning and delivering training, like for example an e-learning tool, for example, and to assist the trainers such as a physical or virtual training material with visual element, experience exchange program practical activities, all the kind of activities you may organize to ensure that the client are gonna get up to speed on understanding how to implement green practices and technology. And then, of course, you have a set of quantitative indicators that accompany this qualitative indicator here on the right. For example, frequency to the training. Is you did once and it's finished, or you keep on doing every month, for example. Number of clients that are received by the technical assistance support. Yeah. Okay, let's get into some example. ASCII from Philippines is an example of green non-financial products and services. So we put a link between financial and non-financial products. It supports tree planting, training on waste management, technical assistance to the client, knowledge development in terms of guidebook on disaster risk reduction and business continuity, disaster risk reduction and management to vulnerable client and group, knowledge sharing and networking. It provides awareness raising events in partnership with other providers on adaptation of climate change, for example. Weather program with organizational development, empowerment of existing group of clients, revision of vision, mission, and goal. We do the implementation by law, but also provide training on bookkeeping, training on awareness raising events, creation of new water system, etc. Sanitation project, part of project toilet facilities, so they're accompanying specific loan products. We provide capacity building and training. We support to develop plans and take collective actions. Energy green product, we have a green activities that are launched in 2013, help improving socio-economic status of marginalized segments through responsible, efficient, and effective use of energy. With this small portfolio here, we have provision of solar panel to women-led micro enterprise and women young entrepreneur. Using mobile money application to monitor such an impact, and we provide orientation training and after-sale services. After-sale services will count as a technical assistance. Sorry, someone said we cannot see the slide. Can you see my slide? Okay. Two, we cannot see the slide. Okay, that's scary. See. Give me please some other feedback. Are the other people able to see my slide? We can, yes, okay. So please check out, I think it is coming from your side. Thanks for the confirmation. Okay, so now we get to the exciting part. In these last minutes we have together, let's open up the Green Industry 3.0. If you still have energy now or in the next days and weeks and you want to do your self-assessment, that's the moment to get energies and see how can I assess my institution along the third standard of the Green Industry 3.0 and understand the status I have in terms of development of green products and services, financial and non-financial. And if you do so, then our friends from Edera Sustainable Solution is going to then send you the scoring of your institution as well as send you the scoring against the benchmark of the participants. Now, to do so, you need to please fill this standard for the four standards. Okay, so the Green 3.0 is a digital solution that allows you to collect this information that has been conceptualized by the Green Inclusion and Climate Smart Finance Action Group heads and has been designed by the IT partner Edera Sustainable Solutions and is freely available on the website of the European Microfinance Platform, Green Inclusion and Climate Smart Finance Action Group. My colleague are just posting that there. But what we're going to focus now, there you will find the full green index. What we're going to focus now is not this one. It will be a specific link where you can just collect your information on the actual green products, yeah, and not all the rest. It's an open source digital solution. It is supported by the Edera Data Management. And this is the kind of report you can generate, in terms of scoring per dimension and per essential practices, an approach in terms of product and service, an approach in terms of risk management. And now let's get into the actual link for products. Yeah. So my colleagues from the European Microfinance Platform are just sharing with you now the link. The second link is the one you need to click. So it's not the digital tool, but it's a tool for standard green inclusive GI 3.3.0.3. Yeah, so this is basically the tool you want to use to assess your own institution in terms of product and services. Let's look into together. Can you please kindly click into the second link just share, and we're going to look together what is inside. You should, once you click, you should then be here. Do you see my screen? Please click inside and let me know if you are able to reach the same screen that I just shared. Okay, super. This is the tool that you want to fill. Okay, how does it work? It works as similarly as the previous one, but it's just focus on this standard number 3. So you just go next, voila. You read that through the various policies, etc. And if you agree with, you just agree, go ahead. You put your first name. So this is what will allow us to then recontact you. Yeah? Put your email, because if you don't put your email, we cannot send you the results. Put your institution name, as every time. Choose the institution, which type of institution it is. Okay. Voila. Then, sorry. There's some non-mandatory field. Region of activities. put your region of activity means where do you have your own activities. Voilà. And then voila, you just move next. Then please here, I think that's also answer some of the questions that were raised before. Please, do you want to provide comments on your answer to the green index survey? Someone asked, is there an qualitative answer? So is there an open field? I think so. If you want to provide comments, yes, put it here. Yes. If you provide no, you will have no place where you can provide your comments. So if you want, just put yes. Second, do you want to include quantitative indicator? Yes, you want, so that they can show it to you, the quantitative indicator every time they're available. Then you move forward, and then I'm not going to go through in the full detail. What is going to happen here is that basically you're going to see in this digital solution exactly the same indicator I just presented before to you, but what you have it now on top of it is that you have the multiple answer. And we just focus a bit on the multiple answer so that I re-repeat some of the concept, but I focus on the possible option. Yeah. Before we just focus on the indicator per se. Now let's see on the possible answer. So let's see first of all the first one. So if we look into the first indicator, you remember was about clean energy and energy efficiency. Now, just to give you an idea how it works, the green index. So here you say, okay, the institution offer loans that allow its client to purchase or to maintain. Okay, one of the two could be. If it is none of the above, you see, finish. You see, the tool go from GI 3.1 to GI 3.1.5. So if you don't have it, you skip all this complexity. You're out. So I'm not offering any loans. Okay. If instead you have, then you say, okay, good. I'm doing what? Purchase and or maintain. You know, and what? Renewable energy or energy efficiency technology. Here there is also a list. So please again see here as an example of training. We're going to provide you a list of possible relevant technology organized in terms of renewable energy and energy efficiency that you could eventually identify as interesting for your own client. And then here we ask you to provide. Okay, what are you actually to answer? What are you actually financing? Solar dehydrator, hydrophonic, solar home system, solar lamps, etc. Energy efficiency, nothing or maybe something. Housing thermal insulation, efficient air conditioning, LED lighting, etc. So you'll have the list of possible things you may do. We strongly invite you go through this list. I think this first part, so the indicator 1, 5, 9, and 13 normally of these standard are very important because they give you full list of practical things your client may do organized according to these various dimensions. Okay. If you do so, then we're going to ask you, as we discussed before, do you do so like with non-dedicated loan product? That basically means you're financing this scope together with any other kind of things like lighting. You finance any kind of appliances that your client would like to buy, or specific. And if it is dedicated, you see, if it is dedicated, it's going to open a set of possible things for which this product may be dedicated. As well, these I very much advise you to read them through because are possible things you may consider to check your green product against, that are the best practices against which a green product should be dedicated for the scope of your clients. Or if you think that you want to develop this kind of green product, just look that through to see if these things make sense to you and if you include these steps into your project of development of green product. So the amount of the loan are adapted to the investment needed for the clean energy and energy efficient technology. The term of the loan are adapted. The repayment schedule adapt to the cash flow that the clean energy and energy efficiency is generating. Do you have a reduced interest rate to incentivize? Do you have a payment for ecosystem services? Do you have a credit risk guarantee? You have an insurance that is linked to the loan? Do you provide technical assistance or training or any kind of other thing that does this product dedicated? Okay. Could also be a non-loan, could also be a pay-as-you-go. Yeah, pay-as-you-go is a solution for which you finance a you finance a technology asset like a solar panel, but the client only pay when they actually use it. There is also the possibility that at the end of this payment, they can also purchase them. That the case will be instead with a leasing solution. Yeah, you lease the active to your client, yeah? Or other financing solution could be. Then here we ask institutions support the development of the specific capacity of clean energy efficiency, lending through, for example, provision of dedicated regular training to the field officers, provision credit to the staff, partnership with provider technology to support the implementation, partnership with provider technology to support implementation of maintenance, here about various technology, partnering with civil society, specialization, semi-grants, etc. Yeah? Once you do that, you went through the first three set of, and then you missed the first one. The first one, institution apply specific procedure and or tools. Let's have a look to this tool to actually provide disburse loan for clean energy and energy efficiency. Voila, use of technical documented information that specify the cost and return on investment for clean energy and energy efficiency technology. So how do you explain to your clients, how do you make the case to your client that they need to go into that? You can have technical documentation. Technical documentation information that specify the benefits. So the first one is about, the return on investment, basically. The second one is about the benefits in terms of reduction of, smoke in house, in terms of resilience they generate, for example, because you will have access to more reliable energy, etc. Technical documentation specify specific benefits in terms of reduction of adverse environmental impact, generating positive environmental impact for these loans. Dedicated marketing material and channel. How do you actually promote that you have a green loan? Do you have material? It could be just be a poster into the branches. Could also be a campaign of calls or radio. What you think is more suited for your target market, your standard processes. Use of indicator. Do you have indicator that allow to verify and track the investment? Because if you say you're finishing something green, how do we make sure that what the client declared is green is actually green and you can report it as green? Yeah. So typically there are indicators that allow you to check this is green. You need to say, okay, for example, to be a solar panel, okay, which kind of solar panel, where it is installed, how it is connected, etc., to ensure that it's actually done correctly. Do you have any kind of software, for example, that allow to actually measure, and monitor the actual consumption of the energy for your client? And then if you want to go to the quantitative indicator, bam, you click it here, and here you have all the quantitative indicator you may answer. For example, energy saving a kilowatt for product sold over the fiscal year, or much simpler, number of loan renewable energy technology disburser of the fiscal year. Now, I don't gonna go in detail for the next because we already introduced them. Then we have sustainable agriculture, important. If you want to see what are sustainable agriculture, here you have a long list of things you may do. Organic fertilizer, soil conditioning, conservation agriculture, agroecology, fire breaks, organic agriculture, wind breaks, light fences, family orchard, quite a long list. Again, this one could also be part of your own training. I will strongly invite you to open it and go through it. And then here, we don't gonna go through, is the same thing. 6, 7, and 8 is what make, it is a non-dedicated loan, it's a dedicated loan. What does it make dedicated? Yeah, do you have capacity? We'll basically ask you exactly the same question as above. But for the specific case, if your loan officer has been trained, has been generating capacity of a provider on the specific scope of sustainable agriculture. This has been divided into 4 parts, exactly because many times you do something, and for this something you have quite specific capacity. For these other things you maybe don't have, so you have a training your client, your loan officer to disburse clean energy loans, but you don't do for sustainable agriculture. You maybe have indicator for waste management and tools, but you don't have for neither of the two above, so that's why it's been divided into 3. But that means it's much easier for you to fill it up. Yeah. Now here you have the same thing now for the GI 3.1.9 is about now clean water. You can see, read it through what could be clean water filters, water storage tank connection and pipe water, solar water disinfection, improve private toilets, etc., etc. Yeah. And if you want to have the last one, that is here the 13. Here, you can have a list of other activities like recycling, waste management, collection of used material, appliances, second-hand clothes, glasses, cans, etc. Production of product used by material appliances that are second-hand clothes, resale, yeah, of this kind of product, sustainable mobility or efficient vehicle, hybrid vehicle, clean technology, other than energy, reduce food waste, etc. And then the same question in terms of is dedicated, is non-dedicated, do you get capacity or not, and have you tools to monitor them. Now, if you go into the green, this is the indicator about the green taxonomy, EU and non-EU, okay, that we just discussed. Here, Institution offers specific loan to client when affected with sudden climate changes, can be yes or no. If it is yes, it's asking you which kind of loan, emergency loan rescheduling, loan restructuring, etc. Now we go to the question about SME. Yeah, do you provide dedicated loans to SME or non-dedicated for green scope? Suppose it is dedicated, then we ask what you finance. Local enterprise production assemblies or distributing clean energy efficiency, local enterprise providing inputs or services for sustainable agriculture, animal breeding and fishery, enterprise that transform or commercialize production for sustainable agriculture, forest and animals, so the provision of inputs for agriculture, for example, the transformation, yeah, assembling or distributing on clean water and sanitation technology, local enterprise providing waste recycling, waste collection services, etc. Enterprise providing small mobility products like bicycle, e-bicycle, e-moped, etc. Sustainable value chain institution like cooperative organic producers, yeah, they collect the production and start transforming to then commercialize. Do you offer this in partnership with products, insurance product? Yes or no. Agriculture index or non-indexes, or protecting other properties. Do you have developed the capacity? That's it can be by dedicated training to the staff, by partnering with third partner to actually provide insurance. Yeah. Do you apply specific procedure or tool to support insurance products? Yeah. What? Satellite data, weather station, existing national database, etc. Do you offer other non-financial products? Could be, yeah, like saving product, remittance, money transfer, guarantee. You support the implementation of green power technology with payment for ecosystem services. Basically, you have a system that pays your clients if they actually do something green. You have greenhouse gas credits. You have green incentives or non-financial incentives for the green product. Do you develop the specific capacity to assess and manage the climate change and client activity and properties, thanks to provision of dedicated training to the staff, partnership with third party, partnership with public agency? The institution applies specific procedure and tool to support non-insurance, like dedicated restructuring or refinancing asset, guarantee fund, refinancing or insurance. You see, it's very extensive. Yeah, this is the most extensive essential practices, but I think it really plays two things. One is really what you could actually do, and one you actually do. Yeah, typically it's quite advanced yet for many financial institutions, but you can really see and find your place here. Sorry, I need to click a couple of things. If not, we'll just not go through. Okay. So you need to click. Okay, then we move forward. Almost. Okay, and if you move forward quickly enough, so don't take too much of your time, awareness raising. Yeah, we go to the essential practice 2. The institution raise awareness raise to the client, and it asks you to what? To vulnerability to climate change, environmental degradation, to possible mitigation strategy, to reduce their vulnerability, to adverse environmental impact. So you see, this is one dimension, the vulnerability dimension, the fact that the client are vulnerable, the fact that there are ways that you can reduce vulnerability. Here is the fact that the client are affecting the ecosystem and the way in which they can reduce their affection of ecosystem. That's the logic behind. And this is the third dimension. The economic opportunity of green practice and technology is not just a burden. You can actually generate new revenue, satisfy your client, etc. And the opportunity to satisfy the client demand. Social benefits, yeah, in terms of additional benefit in terms of health, education, etc. Like you have a light, you can then read in the evening. You can do, the children can do the homework, for example. Diversity of green practice and technology that can be satisfied. You can do by informative leaflet brochure. You can do by poster. You use videos. You can have active or regular workshop. You have individual talks. You have demonstration activities, etc. Like you can have your client that implemented well to demonstrate this activity to someone else. Do you provide then trainings in terms of which way? Collective trainings or individual training? Yeah, one of the two. Then on what? On how to implement green practices, on how to install, maintain, and use and manage green technology, how to mitigate their vulnerability to climate change, environmental degradation, and to mitigate environmental impacts. You provide ongoing assistance, so that means not just training. It's really you support the client to actually implement the technology. If it is no, it's no. If it is yes, it asks you how. is focused on implementation and maintaining green practices, is implementing or maintaining green technology, including after-sales services. Do you link the provider of green technology or capacity to your client? Yes. Field visit, we organize field visit and peer learning opportunities. So there is someone in the field that already implemented something that has generated positive benefits. Do you organize this meeting to exchange practices with your client? You do it as part of a full-fledged program or just a complement to green loans? Do you have developed capacity to provide this training? Yeah, again, and your capacity to what? To vulnerability to climate change, diverse environmental impact, or promote green practice and technology? Again, it seems complicated, but it always goes through the same logic. These are the three dimensions within the green index. Yeah, vulnerability, adverse environmental impact, and promote green practice and technology. You are asking you, do you have this capacity? You have been trained on one of the three for the non-financial products. Then how you did it? You provide dedicated staff to your training, you have partnerships, yeah, you have partnership public program, etc. The institution alone or through its partner applies specific procedure or tools for implementing and delivering training. It could be how to address mitigation on what, how to address and mitigate vulnerability, how to reduce environmental impact, how to promote green practice and technology, again, three dimension. And then here below they ask you, okay, what are the tools? You do in-person or remote training material with visual elements. You have games on case studies. You promotion material or procedure, technical fact sheet on green technology and practices, structure and define training on technical assistance time plan, events with defined topics, experience exchange programs, demonstrate events where you implement, an actual demonstration of the practice you would like to sell. If then all is done, you click here, and then if this was your self-assessment, that we strongly invite you to actually take a moment to do, so that you will generate the scoring of your own institution. And if you do for all the four standard, then either a sustainable solution is going to send you back a scoring of your institution plus the benchmark of the participant. Then you need to submit it. Davide, try to submit. You click and you have submission successful. If it is like this, it's done. You need to have this screen to appear. Okay, it took a bit of a time to you. Sorry for that. It was also a lot of talking, but there's a lot of information. Ensure you submitted. And here we are. Do you have any questions, comment, or sharing examples and experiences? Please raise your hand. Please take the micro. Please write into the chat. Don't leave yet. Our colleague from e-MFP will also then share a simple, satisfactory survey. But before that, do you have any question, comments? We reach here to the end of the session 4 of the 4 session provided to you by the European Microfinance Platform Green Inclusion and Climate Smart Finance Action Group on the training on the Green Index 3.0. You will receive all the material by email, so the training material as well as the video. You have access to the green map where you can further strengthen your knowledge. You have access to the manual of the green index as well as you have access to the actual green index per se. You also have access to the 7 session online training provided by Green Climate Finance Action Group. And of course, we kindly invite you once more to fulfill your self-assessment. A generic question here: is there a reason why e-MFP calls this green and climate finance and not green microfinance? Just curious. Yes, it is. Because first of all, these kind of practices can be implemented also by non-microfinance institution. For example, a pay-as-you-go company could qualify to do green inclusive finance, but maybe not do microfinance. So it's a finance that is inclusive, that is providing, for example, an asset with sustainable with the financing facility to a population that is like excluded by the normal banking sector. But also it could be that this kind of practice, as you see when we speak about SME, can be extended also a bit beyond the standard microfinance sector, because it helps the generation, of the local communities. That's the 2 reasons. One is which kind of actor can implement these practices, could be used also beyond microfinance institutions, banks, cooperatives, NGO, technology provider, technical services, etc. But also is a bit about the scope, because it goes up until any kind of categories that are partially excluded by the banking sector. And sometimes these are attended by the same institution, like a bank that has a subsector of microfinance, sometimes by other institutions. Okay, any other feedback? If not, we very much thank you for your participation. Please take again 1 minute of your time. There is a quiz, a poll that just appeared online, where we simply ask you where your learning experience met during this session. 1 is not at all, 5 is totally, 3 half, and then 2 and 4 are in the middle. And what topic would you like to explore further? Yeah. Please take a second. Your answer will clearly feed our understanding, and eventually will be part of a reflection to how to adapt the action group activities to support your green transition. Thanks a lot for everyone. It was a pleasure to spend this time with you. You have been part of the pool that both has training from my side and Natalia, because we have half and half. So we hope you enjoy them both. We hope that this is just the beginning or a refreshing of a journey through green transition. At the action group, of course, if you think you're interested to join the action group, just write to the email of the action group. And we will be very happy to be keeping contact and start rediscussing and work together on the green transition. Any program or idea you may have to think that could be interesting to develop, do in terms of data collection, in terms of exchange of practices or other, please just kindly make sure you reach the email that has been shared here above and the one here, green@emfp.eu. So that my colleague from EFP will be very happy to come back to you and start discussing. With that said, thanks a lot once more. It was very nice to spend this time with you. And we'll be in touch very soon. This is nothing than just the beginning. Make sure you fill your self-evaluation if you want to do so. That will very help. You will be your support to improve our understanding of the present status of green practice into the sector. That will be very helpful for us. Thank you a lot. I wish you a nice day.